Hello everyone, welcome to the 10th of November weekly market updates on technical insights. This morning, Asian markets traded higher as sentiment was boosted by optimism over a potential deal that could end the longest US government shutdown in history. A deal that's being discussed on Sunday would reopen a US government into January and reverse some of the recent mass federal layoff. Over the weekend, we also saw an unexpected rise in China consumer prices in October, driven by holiday spending, while producer prices in China fell the least in 14 months, easing deflation concerns and stabilizing industrial margin amidst the price war. The Japan Nikkei 225 index jumped by more than 1% this morning, and Hong Kong Hang Seng index also rose more than 0.6% in early morning trades, led by consumer and the property sector. Over in the US last week, all three major US indices pulled back from their all-time high amid mounting concerns over the high valuations of the AI stocks. The Dow rose 0.16% on Friday, but lost 1.21% for the trading week, ending below the 47,000 handle at 46,987 points. The S&P 500 added 0.13% on Friday, but ended the week down by 1.63%, with the all-time high now standing at 6,920 points. Tech-heavy Nasdaq Composite Index lost 0.21% on Friday and was the worst performer among the three US indices for the week, ending the trading week down by 3.04%. This also registered its biggest weekly percentage drop since the early part of April this year. Concerns over the US shutdown has driven consumer sentiments to the lowest level in more than 3 years, and a deal being discussed on Sunday would reopen the government into January. This morning, news emerged that enough Democratic senators had agreed to vote for the deal to clear the 60-vote minimum threshold. The Senate may vote on the deal as early as today, which, if passed, would have to be approved by the House of Representatives and signed into law before the shutdown could end. Key data this week that investors are looking forward to, including the latest CPI index reading on Wednesday, and investors will also get a handful of earnings report this week, including Walt Disney quarterly results on Thursday. Back to Singapore, our STI index broke the 4,500 handle last Thursday and found a new all-time high at 4,520 points. This was after positive earnings reports from the three local banks. For third quarter of 2025, all three local banks reported combined non-interest income above the $5 billion mark for the first time at 5.06 billion. This was up by 13% from the second quarter of this year. Combined net interest income also remained above the 8 billion mark for the 12 consecutive quarters. For third quarter 2025, DBS reported a 3% total income growth from the second quarter, and OCBC reported a 7% total income growth from the second quarter, with UOB being the outlier. The third quarter income declined by 2%. Singtel was the top performer last week, getting 9% and topping the STI chart, reaching a new year-to-date high at $4.73 last Friday. Singtel has reported that it has sold 0.8% of its Airtel stake via a private placement, unlocking 1.5 billion and booking an estimated 1.1 billion gain as part of its ongoing portfolio optimization. This brings the proceeds of the active management program to 5.6 billion, more than half of its mid-term asset recycling target of $9 billion, while also keeping a 27.5% stake in Airtel. Singtel also confirmed that ongoing discussion as part of a consortium with KKR regarding ST Telemedia Global Data Centers and emphasized that there is no certainty of a deal. This followed news report that KKR and Singtel were in advanced talks to acquire 80% of ST Telemedia Global Data Center for more than $5 billion, aiming for full ownership. So for this week's technical analysis, let's take a look at top gainer last week, Singtel. This Monday morning, Singtel share price pulled back by 10 cents or 2.16% after last week's massive 9% gain. We noted from the Singtel price chart that Singtel share price was largely in an uptrend so far this year. Even with the US tariff announcement in April this year, Singtel share price does not seem to be much affected. The most recent high that we observed prior to last Friday's jump was on the 19th of September at $4.45. After that, Singtel share price pulled back 8% to a low of $4.06 on the 30th of September over here. This range of $4.06 to $4.45 was largely intact for the month of September and October. Following last Friday's price jump, Singtel share price has broken above the upper bound of the Bollinger Band at $4.53. Immediate support can be seen around the green and the blue line, which is the 20 days and the 50 days moving average at $4.30 and $4.31 respectively. Further support can also be seen at the 100 days moving average in amber at $4.16, with the low bound of the Bollinger Band now at $4.09. Looking at the indicators, the MACD reading shows a very strong positive reading, indicating that the year-to-date uptrend will likely continue for the mid to long term. The latest RSI reading at 65 points signal that the uptrend momentum is still healthy and has yet to reach the overbought level, indicating that there could be further upside in the near term as well. On the analysts covering Singtel, 12 have a strong buy call, while 4 has a buy call and 1 has a sell call. The average 12-month target price among them is $4.77, representing about a 5% upside from the current price. Investors looking at Singtel could use the immediate support of the 20 days and the 50 days moving average around the $4.30 level to further accumulate on Singtel shares, targeting the analyst 12-month average target price of $4.77. And these are the updates that I have this week. If you do find the information useful, do remember to like, share, and subscribe to stay updated with the latest market movement. And I'll see you again next week in the next Technical Insight.